So Policy Bazaar was started about almost 9 years ago, and I'll spend about 5 minutes on how we got here, and then spend much of my time, because Policy Bazaar is one of those companies which is becoming fairly mature stage. So then we'll speak about the points at hand here. So when we started Policy Bazaar, why did we start in the first place? If you look at the Indian insurance sector, there is a lot of investment cum insurance products sold. Extremely low number of pure life insurance or pure health insurance sold. Just to put that in perspective, even today, only about 3% of all insurance premium in this country, and I'm talking about just the retail insurance premium, belongs to health and life, pure health and pure life insurance. Pure life insurance is about 0.4, 0.5%. That in comparison to something like the US, health and life, of the health, life and investment kind of products of insurance, would comprise roughly about 50% of the premium. So in India, we're at 3%, where it's 50%. Mostly it is believed that those products, which are the insurance cum investment products, are bad for the consumers. These are products which there are about 3 million agents out there, and these 3 million agents go door to door selling these products. It's a very difficult job to sell these products. Typically, one of these agents will sell 2 policies in a month. So those of us who know what the cost of living in this country is, unless the person makes some money, why should he be doing it, right? And typically they have to make about 15,000 rupees per transaction. So Policy Bazaar came in and we said, we're going to hit that segment which has about 2,000 rupees you can make on a transaction. But these products are genuinely good for the consumer. There is 2,000 rupees to be made. It's not like we're distributing for free. There is 2,000 rupees to be made, but these products are genuinely good for the consumer. And if we succeed, there's a big question of if we succeed, the entire agency force will be unable to compete with these products for a very simple reason, that their cost of distribution is about 10 to 15,000 rupees per transaction, and we'll be operating at a price point, at a cost point of about 2,000 rupees, which for the offline channel is very, very difficult to replicate. It was a very difficult start, of course. Our initial cost of acquisition, just to put in perspective, was about 20,000 rupees, so higher than the offline. And we had to make money through advertising and various other ways. But on a contribution basis, and one of the reasons we've become sustainable compared to most of the players in the market, on a contribution basis, Policy Bazaar never made a loss from day one. So in month 1, our revenue would be 4 lakh rupees. Our direct cost would be 2.5 lakh rupees. But that's how we operated all along. We were okay to take a loss on fixed cost, but not on direct cost. Direct cost includes all your cost of acquisition and all your operating cost. So on that basis, we never made a loss. And we kept scaling up slowly. We're very patient in doing that. In about 3-4 years' time, we reached a stage where we were able to acquire customers at about 5,000 rupees. And, we could earn about 1,000, 2,000 rupees on these products. But at that stage, we became confident that we could bring this cost down. Today, we make about 2,000 rupees per transaction. Our cost of operation is about 600 rupees per transaction. So we make about 1,400 rupees of contribution. And we recover all our, costs, including my salary, our office, everything. And at the end of it, we put in a profit of about 30 crores in this last year, which we are going to finish in March. And with that profit, we are now supporting another business, which is Paisa Bazaar. So Paisa Bazaar consumes about, it's at an earlier stage. It is where probably Policy Bazaar was 3-4 years ago. And that's what, that business is doing, right? But I think a few questions come in mind. And, I think in today's world, however large an organization becomes, and that's a cliched statement, you can't really afford not to be nimble. But how do we as an organization manage that? Because it's getting to a stage where there are about now more than 2,000 people in the organization, more than 400 people in technology, product, etc. And so it does start to become a bit of, general managerial responsibility. And usually with these general managerial responsibilities start coming in, annual appraisal systems and, all that kind of stuff which happens in larger organizations, which usually does not happen in a startup. In a startup, usually you're focused on the task at hand, the next 6 weeks, etc. So how do we, manage to do that? What we have done is, and there's a second part to it as well. which I'll talk upon just after this. So we've created very, very small business units. Each business unit cannot be more than 100, 150 people. Sorry, no worries. And these business units are people who've been in the organization for some time. They understand the ethos of the organization and they work fairly independently. When I say they work fairly independently, this is where I believe I have not been as successful as I should have been. We have not been able to create layers. What does that mean? A lot of people still report directly into me. So while we have these business unit heads, a lot of them still report into me. What we have not been able to create yet is a layered reporting structure where the feeling of ownership is still there. And this is a big battle that starts to happen about, I think, our stage of organization. Because when you started, you were all kind of brothers and sisters in arms. You were sort of at it together. You used to go to battle every day together. And now there is a need to start to create a structure. You know, you need to have CXOs, and the CXOs need to have business unit heads, and the business unit heads need to report to the CXOs. Every time I've tried to do that, unfortunately, the culture of ownership deteriorates. So we really struggle to take it beyond level 2. At level 3, if you have long established people at the level 2, they are able to retain the culture somewhat into the level 3. But if you have new professional individuals, because we have a lot of those also coming in at the level 2, the culture does start to not become that of a startup. It starts to become very functional culture. And for me, that's one of the biggest battles organizationally I'm having, of how to balance this between a more structured business versus more of a ownership-driven culture. And there's nothing positive or negative about either one of them. Sometimes from a performance perspective, the operational ones have worked better. Sometimes they have worked worse. In fact, I would say, as we are building up scale, a lot of the people who had the ownership and the energy and the enthusiasm, they are struggling with scaling up. Because if you just think about it, those people perhaps managed a business which was about 2-3 lakh rupees of revenue a month, and it has scaled up to maybe 150, 200, 300 times of that. Suddenly they've got a technology team, a marketing team, they've got people, they've got managers. Their own compensation has probably gone about 4-5x. So some of them are not able to operate like some of these new professionals that we are able to bring into the organization. So there's a lot of struggle, and I don't want to lose these people very easily because they have been part of the struggle, and I want them to be part of the organization as it matures. How do I put it? I think these individuals may not have as fine an opportunity in the outside world as they have within Policy Bazaar, because they grew with Policy Bazaar. And I somewhere feel I owe it to them that they stay part of Policy Bazaar, but somewhere they're not stepping up many times. They're stepping up in kind of their ethos, but not in terms of their performance and their general managerial ability. So it's a bit of a challenge, which we are having, but we still stay nimble. The organization has to have the ability to run without. If it doesn't have the ability to run without, it starts to become a massive struggle, because you can't be there all the time for all the decisions, for all the actions. And somewhere there is so I'll give you some simple examples. We have probably a 30 people product team, right? And people who get into product have learned product from all sorts of places. Some have come from an IT organization, which used to maybe an Infosys or a Wipro. Some have come from another startup, and some have been working in Policy Bazaar for a long time. I would have a certain way of doing things. If you notice, Policy Bazaar has a certain way of running the website, running the call center, integrating these two. We have a certain timing of pushing from one way to the other. It's a very, very fine balanced art of when do you stop your call center, when do you go fully online. If you notice, our two-wheeler business, our travel business, these are fully online, where you have no phone number, nothing. But in something like a health insurance, it's very, very essential, because there's almost a 90-minute talk time before a transaction happens, right? So we cannot have people coming in and disrupting way too much. So there is a Policy Bazaar way of thinking, and hence people have to kind of get groomed to that. So that starts to become the challenge. I have to keep the ethos, the philosophy of the organization there, but I don't have to get operationally involved to a level where day-to-day interference is required. At best, the fact that people know you are there, that is all that is required, I believe. Okay, incentive structures and long-term retention. So I used to work as an employee before I started this company. I worked as an employee for about 16 years, maybe not 16, but quite a few years. 1996, 12 years. I worked for 12 years before I started this company. So I've been on both sides. Everybody's different, but I never worked for a compensation. I did not even know where I was versus my peers. And I never took my compensation seriously, ever. So I fundamentally do not believe compensation structures can motivate people to do brilliant stuff. I believe it has to come from within somewhere. There are people who will just do it. But at the same time, as a founder, I have to also believe everybody may not be like me. Some people do require a compensation structure and a compensation plan, so we take it very seriously. One thing that people told me, some other founders told me, and I think you were very lucky to kind of have this series of 10 people coming to you. I wish I could be here. But once one person who founded Cafe Nero, he told me, because I asked him, how do you structure equity? And he said, look, basically, if your organization is successful, then whoever the person you're arranging equity for should be in a position, if it is successful, they should be in a position where a lot of their aspirations are taken care of, in the sense, house, if they're looking to have a good house, if they're looking to have a decent life, a certain amount of capital with themselves, a lot of that should be taken care of. And I kept that in my mind, and essentially that is how we work backwards. We said, okay, if the company is going to be successful, which means it's going to do an IPO, because before doing an IPO, you really don't have too much value. I don't believe in accidental valuations, by the way. That's another big one that I have in my... So I don't believe in accidental valuations, I believe in fundamental valuations. Accidental valuation means somebody values you at something, which I think over the last 3-4 years happened a lot. But fundamental valuation is, you can stand there and your valuation is not changing. It's there. It's just there. Out of 10 people, 9 are saying yes, it's right. So my view is, if you need to IPO, you need to IPO at about $500 million. At about $500 million to $1 billion. That's about the range at which any IPO, minimum IPO on the internet will happen. How much equity will this person have at that stage? And will that be sufficient? Will that be at least, a few crore rupees, so that he can have a house, he can have basic stuff taken care of? I'm talking about, mid-management level, right? So that's how we structured all our equity. We also have an incentive plan, and it's a combination of both organizational performance and individual performance. We always kept this. There was a huge requirement for why not have just individual performance. Now, there are two reasons why you want to have organizational performance. First of all, it's simpler. It's very, very difficult to get to each individual and say, what are they responsible for? What is a product person responsible for? What is a salesperson responsible for? The salesperson can't perform till the product person performed, right? So there's a lot of interlinkage between people. So overall, and the overall, performance stays at about 70% of it. So we structured around that. But there is a component of individual also, which, people are responsible for. Mostly around your actions that you will have to perform and complete. Industry changes. How do we think about industry changes, landscape, regulation, consolidation, substitution, competition? See, by the time, if I would say if you are lucky to have an organization which reaches our kind of situation, where you've got a very, very large share of the market you are building, and there's almost no like your nearest competitor is about 1/20th your size, then you play a very large role. You have to play a very large role in regulation formation. You cannot sit back. So this regulation thing is not something that happens out there. People make it happen. And it's mostly not government driven, it's mostly private firm driven. There's very little business regulation that just, people just wake up in the morning and say, okay, I'm going to bring out this regulation. It's usually driven by somebody, some organization, some people. And by a certain stage in your organization, like I would say about 3-4 years ago in Policy Bazaar, we had to be in a situation where we were driving regulation forward, having a view on where it is headed. And people use all kinds of words, lobbying, etc. But essentially, you need to be part of the system in influencing thought leadership and not sit back and wait, because otherwise you could get very, very big shocks, especially in like we got in 2011. In 2011, we were almost wiped out by regulation. So you have to work far more proactively than that. Consolidation. I think consolidation can be valuable. It can be very good. But before consolidating, it's an easy word these days because my view is somewhere it hides the flaws of organizations. But that's an Indian context. Many times consolidation can add value. And I'll give you some examples. Just last year, when one of these competitors started burning money very heavily, we had to respond. And we lost about 35 crore rupees extra, which was absolutely, so I can tell you exactly what it was. The keyword policybazaar.com is our largest marketing spend. So we spend, to defend that keyword, we have to bid on Google. And we spend roughly 1-2 crores a month defending that. So basically what the competitor did was they started bidding on Policy Bazaar against our own keyword. Of course, you have to pay 10 times more than we have to because our click-through rates are much higher. But we had to defend that situation. And our own cost on our own keyword went higher than the other keywords. So at one time, we were spending roughly about 300 rupees per click on our own keyword. And that became like a 4-5 crore a month spend. So the advantage of consolidation was that thing could stop. If one look at it very, very simply, you could save that. But thankfully, they kind of ran out of money, and that part did not happen. We requested them again and again, and usually what will happen is if you are like-sized organizations, you will pull back. So, for example, we may have a deal with a similar-sized financial services thing that we won't bid on your name, you don't bid on our name, and usually people agree. But somebody much smaller, they may still have an interest in doing that. So consolidation can help from that perspective, but we've usually stayed away from consolidation. When we looked at that sort of a situation and the opportunity came around, we said, look, it encourages competition. Today we acquire somebody by paying them, somebody may have lost 120 crores. You say, okay, you've lost 120 crores, here's 120 crores, we acquire you. And you may have the ability to do that. But what it does is it encourages others to do exactly the same thing, come into the market, burn money, get to, little scale, and then hope that you'll buy them because you bought somebody else before. So to signal to the market, it was very important we did not do that. So we just pulled away from that. But there could be situations where you would, where there's a lot of complementarity. Usually if you are merging two very similar businesses, it's very unlikely to be consolidation except for cost saving, as in competitive cost saving. Because you could probably scale that up yourself quite easily at a lower cost than the acquisition. Substitutes competitors. One has to be very watchful on this. So we watch this very carefully. In fact, I am said to be paranoid about it within our own organization. So even the smallest competitor that comes on the stage, smallest competitor, like just to put in perspective, we might be doing 10,000 times more transactions than them, but we are watching even that smaller competitor in terms of what they are doing, what change they are making in the market. And if anything makes sense, anything at all makes sense, we would replicate in no time. So we're watching extremely carefully, and I think one has to do that in today's time. That's one of the strongest parts of being nimble. I know everybody sort of makes these cliched statements, don't look at competition, look at yourself and kind of grow your business and all. Competition wipes out companies within a few years, which have been set up over a period of time. And I think people have to respond to it very, very quickly. I believe had Yahoo responded to Google when search was happening way back in 1996, they may not be where they are. They thought it would be, it wouldn't happen. So a lot of times I believe we let competition be. So our response comes very, very quickly. I'll give an example. There was somebody who was selling, when you sell two-wheelers, you make 50 rupees per transaction. So it makes no sense to sell them commercially. But what one competitor started doing was in a very, very quiet manner. They have no traffic, they have nothing, but in a very, very quiet manner, they started selling with every two-wheeler, they started selling a dengue care product, etc., on which you could make about 400-500. So what they would do is, they would basically go to two-wheeler agents, pay them, you make 10%, you pay the agent 50%, you take the policy from the agent or pay him 30%. So the agent makes more money from you than from the insurance company. You take the product and you attach dengue on them. And there was a very decent attachment of dengue, because dengue as a product is only about half priced, or about 30% of the price of a two-wheeler insurance, but it has 100% margin. So it can give you a lot of margin, right? Now, those guys paid us a big compliment. They said Policy Bazaar took about 7 days to respond to this. They said, we can't believe that. They said, we started it somewhere in Jalandhar, and Policy Bazaar responded within 7 days with an all-out offer on this, right? So I think that kind of flexibility, that kind of thing to respond, you have to always keep. We have a lot of lateral risk coming in right now. Because, see, what has not happened in our industry? Discounting has not happened in our industry. How has e-commerce been built? Largely by discounting. At least the build part, right? So our biggest fear is somebody comes in from a side and starts offering discounting in this market. Because it's fairly straightforward. If you're basically told, okay, go and do everything on policy. I don't believe anybody can, what they cannot do is provide the guidance we provide on health insurance. I, hand on heart, believe that is very, very difficult to provide. And most likely they would not be able to provide that in a feasible period of time. But what they can do is, okay, you go to Policy Bazaar, you search everything, just take 10% discount from me, right? That's an easy one. And we watch that part very closely. We work with regulation very closely. So that's the one fear we have. And we work on that side quite stringently. So we started, when we were in the earlier stages, we used to do a lot of experimentation. Even as early as 2 years ago, we could do a lot of experimentation, lose a lot of capital on one particular experiment. It may not work, and that was fine. But as we are getting in this, some of you may go through this, as we're getting closer and closer to sort of the IPO time, unfortunately or fortunately, the analysts need stability. It is a proof that your business model is working, and it is a proof that there are going to be few surprises for the public as you kind of enter those stages. So, a lot of the innovation starts to slow down. We focus more on growth and stability for these next 1-2 years. And that's just part of kind of doing an IPO. Is the price you paid for doing an IPO, if you want to do it. The reason we have to do an IPO is because there are investors. There's no particular reason why we should be doing an IPO, but there's another reason. There's a lot of public money which will only be invested into public markets. And suddenly your investors get access to that. So they can kind of exit, etc. Insurance sector road ahead, I'll speak about that a bit. Which key firms will do well? I really don't know which firms will do well. My view is the firms that will do well will be the ones that have thought very deeply before acting, have got something really innovative out there, and do not just spend money blindly. Because I think spending money blindly is one of the easiest things to do, especially if you have capital, whether you have American capital or Chinese capital. It's somebody else's capital, and you can spend it easily. I don't think those organizations, that'll be mostly wasted, because those benefits don't last, is sort of my simple view there. I really don't know which organizations will do well. I'd love to chat individually on that. On the road ahead in insurance, I think as you look, bank assurance. So there are two primary channels which are working. When we started Policy, there was only one channel. That channel, so 90% of all sales used to happen from these 3 million agents, right? The entire broker channel is quite small. Agency was the biggest channel, and agency is largely what LIC drives. But agency has been dropping, and bank assurance has been growing. So all the banks, etc., they've been growing quite rapidly. But as I look out 5-7 years from now, I think online will be a big chunk of the purchases. A lot of people will be coming online to do comparisons and finding the right products and buying those products. I think protection will be a big part of the mix. I think agency will suffer. I think agency will will really, really struggle because the economics won't make sense. Plus, options like Uber and a few others will make sure that people have enough options not to work as insurance agents and sell the not so good products. There's a lot of capital behind the government companies, but I think from a profitability perspective, they will start to struggle, and we've seen signs of that. So if you look at certain companies, some differential products, etc., happening there. So my view is online, protection, life insurance, health insurance, critical care, these products will lead the industry. And I believe online will be a big part of it. I would say in the next 3 years, about 15% of it. In the next 10 years, about 50% of it. Bank assurance will continue because banks will continue to sell insurance. And that's going to be the mix. Agency will decline. But we've got about 20 minutes or so. Very happy to sort of take questions. Sure. Yes.
Many of us are thinking about starting a startup and things
Yes.
like that. So I want you to take you to the year 2008.
Yes.
As to what was going on in your mind. Was it that it was a stepwise climbing the ladder and finally you decided to start a startup? Or was it a eureka moment which happened? And if so, then, was it a problem-solving issue that made you start a startup? Or was it a business opportunity which you saw? Can you
Sure.
make us go through the journey part in 2008 probably?
Yeah. It was a combination of a lot of things. So what we had done was I had run this company called eBookers, which was effectively like the Make My Trip of Europe. And that business was sold in 2005, mid-2005. And we were thinking about what next. We were barred from doing travel in India and a few other things. I came to India, and one of the things that happened was I was interacting with my father. My father's a retired army officer. And he told me about these investments he was making, where he was making roughly about 2 to 3% returns every year. And he was quite happy about them because he used to save taxes. And he would get this 2 to 3% return. And he used to say that, okay, in my FD, I get 7%. That time it was 7%. And here I get 3-4%, but I'm okay. It's fine. Every 3 years, the person would... This happened from 2003 to 2008. So it was building up. This whole story was building up. By 2008, he had invested about... He and my mother and, he used to file my taxes also. Together, we had policies worth about 30 lakh rupees. We had spent about 30 lakh rupees. And this 30 lakhs was staying about 30 lakhs, 31 lakhs, 32 lakhs. Now the stock market, for those, obviously, you guys know this, 3,000 rupees to 21,000 rupees in that time frame. So I didn't know what these products were. But when I looked at these products, these were basically taking my father's money and putting it into the stock market. And putting about 50% of his money in the stock market, and about 50% the agent was taking home. End of story. And if my father cancelled these policies before 3 years, a large chunk would again be taken out and given to the company. So the company's profit was from surrender charges, and the agent's profit was from upfront take. The whole idea was the market has to keep growing at 70% so that there is about 2-3% left for the customer. That was the story. And this product was selling, give or take, 50,000 to 1 lakh crores. So there were so many people in the market that this was happening to. It almost seems like, fantasy right now, that this was going on. And people like my father refused to believe this was the case. In fact, I used to run in the stadium in Noida, and they used to ask me, I used to tell them I'm thinking of doing something in insurance. And they would say, tum log ullu banate ho yaar. First thing, tum log ullu banate ho. That's where our ad came from. Ullu mat banao. In fact, our ad came out in 2009 itself. Ullu mat bano, compare karo. So, we decided to expose this. Yeah. We said we're going to expose this. That, people cheat in this manner. I have to share this. I actually got a legal letter from, you'll understand which company it is, from the company I've spoken a few times about, that you cannot explain our product. You shall not explain our product. Because they were so afraid. Because I was going on television and explaining the product. This is what the product, exactly as I explained to you. This is what the product is. Very simply, not bad-mouthing it, it's factual, right? So there was a sunshine. We at Bain had this, at Bain I was taught one thing. Always believe in sunshine. One day, everything you do, imagine if it came out on the Sunday Times. I used to work in London, so they used to say Sunday Times. Imagine if it all came out on the Sunday Times front page. You shouldn't have to be ashamed of yourself. You shouldn't have to commit suicide or something, right? That's how you should live your life. So this whole industry had a sunshine test problem. This whole industry could not face the sunshine. And so I thought this is like a brilliant opportunity, a bit out of anger, a bit out of frustration for my father having lost so much money, and a bit out of, wow, what an opportunity, right? Multiple lakh crore industry which has a sunshine test problem. So we basically took the sun and kind of put it on them. And that's all we did. Ullu mat bano. They reacted. They reacted very aggressively. 2011, they almost shut down our company. In fact, every 2-3 years, they attempt that. Because it's a very important thing for them. Because they cannot live with sunshine. And they will... Let me tell you one thing. In private, if you talk to the insurance company people, as a friend, they will say only good things. If you talk to them in a professional manner in any way, I can assure you nobody will ever say anything good about Policy Bazaar. They will only badmouth. Because it is hurting the business. It is hurt. And if you, let me now take more credit than is due to me. Since 2008, the insurance industry has not grown. That's about when we started shining the sunshine on them. Nobody has an interest in shining the sun on them. Not the regulator. Because what will the regulator regulate if 90%, 97% of what is happening is that? And we've been, pulled up by the regulator that do not speak too much about it, etc., etc. In many ways, one way or the other. So, but now we've reached a stage where we have to survive also. So we don't speak very much. If you notice, last 4-5 years, Policy Bazaar has not made big, bold statements about, this is what's wrong, etc. But broadly, we are taking the industry in the direction of protection. So first, it was a fear that we hit the industry with. But we also explained to them, look, sorry, I keep pulling out these small things. If you don't do good to the other person, nothing good can ever happen to you, fundamentally. So I explained to them, this is not the way you can build an industry. The most profitable companies in the market, go and have a look, for those who are inclined, go and have a look at the most profitable companies in the market. They're the ones with the largest cancellation rates. Because there's only one way to make profit in the industry, is surrender. Because they don't have protection. So every time a customer cancels, you make 6,000 rupees, and that's your source of profit. It's very straightforward. Have a look. Just have a look at this. Profit, cancellation rate. Highest cancellation rate, highest profitability. Company in point, Bajaj Allianz. Go and have a look. Right? But what we were telling them was, look, don't do these investment products. They fundamentally cannot make you profit. These are what banks should be doing. These are what mutual funds should be doing. Your job, and you are the kings of insurance. Cover people for 1 crore rupees in case they die, for their family to have those funds. And you will make money in that because there's enough money to be made in that. You know why? Because the entire actuarial tables of India are based on 1949 data. And in 1949, our average age was 47 years. And today our average age is, with all efficiency coming in the medical sciences, etc., it's only going to increase. The entire reinsurance market of the West wants to invest in Indian risk because it's the youngest country out there. They're getting old. And sorry, it takes a bit of stepping back and industry knowledge here. But the entire West has got pension payouts. We're on the other side, where we're going to cover people for the first time on life insurance. They've moved on. And so those reinsurance companies are desperate to get into this market. But they said, nobody buys insurance. That'll be 1% of the market. I said, that 1% will give you the profit. And today, look at ICICI Prudential's IPO. Entirely based on, we will build protection. Look at what HDFC Life is saying. I shouldn't take more credit than is due, but I believe somewhere, maybe we've transformed the industry. But yeah, that's the kind of situation how it started. So we tried corporate. We really struggled. Some of obviously from my batch, a few people were running companies, etc. They might be CXOs in those companies. So a few people owned some companies, largest companies. We went and pitched there. I don't know what's wrong with India, man. Like, there's serious corruption at every level. We really could not succeed. Wherever we pitched, our competitors would know the quote within 5 minutes, and we would never get a call back. Because the HR guy, the admin guy, as you guys get into organizations, look out for this. The admin guy is making 10 paisa on every car ride. We've tried to make sure they have no purchasing power whatsoever. And everything is given to large corporates, which might be more expensive. But we could not figure out a way around that. So we were basically not welcome at any of the admin HR places at any of the organizations, pretty much. Even when the owner was a friend. The owner was saying, you have to call these guys. The guy would say, "Ha, sir, I've told them, they are aware, sir. The other guy is giving better quote." Quote, anybody can give anything, right? So, but we are targeting the SME market. The below 150 people organizations, we are getting inquiries. We have a section on our site. We are getting inquiries, largely health insurance, largely Mediclaim products. We are doing for them. They anyway struggle to get serviced. Typical policy size about 1 lakh rupees. That part we are in. But corporate, we just decided not to be in because we just can't do it. Yeah, it's not something we can do. We're just not in that game. Yes, I was, the CTO also of eBookers. So when we built out eBookers, I was the Chief Technology Officer, and then I became the MD of eBookers. So had a fair idea of technology, but I'll explain what I mean by that. What I mean is, tech is not a hawa for me. It's like, it's normal. So I'm not afraid of it. I'm not worried about it. I don't believe in our business, tech was a massive differentiator because technology is actually quite straightforward. But knowing what to do is very important at the tech level. And I think that part many times gets missed in the zeal to do something technically that looks good or that is superior. We sometimes miss why we are doing it. I think the why is far more important. Technology is an enabler. It will just be there. As long as we treat it as so in my business at least, we treat technology as the secondary, not the primary. The idea is primary. The business thinking is primary. So books, I don't know which ones to read, but I'll say one thing. I'm different in my belief from a lot of others. So I hear a lot of people say, when did sine theta, cos theta ever help us? Actually it's helped me quite a few times, by the way. So I think academics and what we learn in the classroom does get applied. It is not that it does not get applied at all. It is not all personal relationships out there. There is a lot of analysis that happens, and increasingly so in the e-com world. I would say if you have a fine, even people from the IITs and IIMs, when I interact with them many a times on the fine thinking are sometimes flawed. So it's very, very important to develop that acute sense of data and data interpretation. I think besides that, interpersonal skills eventually are very key. You have to be able to, unless you're working in treasury or something, or you're building something on your own in artificial intelligence, if you're going to work with a team, the most important thing is, do they feel like spending time with you? So it's crazy, right? So you have to, be able to get along with people. And I think when I look at a lot of people coming out, from Ahmedabad, we've hired quite a few. There is a lot of struggle on that front. In fact, I'm just being upfront here. I find people from Narsimonji, for example, doing very well, because at some level, to be fairly honest, maybe the analytic skill is higher, but the adaptability and willingness to work with a lot of people, willingness to work with people at every level, willingness to explain to people, having the patience to explain, and the interpersonal skills, etc. Sometimes I believe that some of our graduates have started to believe that is not as important. People should get it because they are smart or something. And I think that part is equally, if not more important. And something we should definitely keep because, yeah. Thank you.
Thank you so much, Yashish, for a very, very insightful session. The video of the session will be shortly put on YouTube. How to start a startup, IIM Ahmedabad is our channel. I'd like to invite Professor Rakesh Basant.
Thank you. My role is actually to thank Yashish, and it's a pleasure to do that. Very nice of you to come. I was telling him when he came to see me a little earlier that I have a special connect with his batch because I started to teach at IIMA with his batch. His was the first batch I taught. And I believe he was not in my section, otherwise he would not have been here where he is right now. I did not teach him. But it is a special connect, and it's a special personal pleasure that you could come. And I'm sure all of you enjoyed your interaction with him. And we would like to have him here again for another lively session. Thank you.